Today, we will discover how to spot setups quickly. We will be observing the price action in detail for momentum trading. Furthermore, we will improve our trading skills to achieve pro trader level. If you're ready, let's go. Today, let's talk about how to read price action in detail by looking closely at the market structure and explore different ways of understanding how the price moves. As you can see in this Bitcoin chart, the price first hunted the PDL or the previous day low before quickly rallying back above to take out the PDH, which is the previous day high, along with the previous week's high level. At the top, we also have these equal highs forming together with the PDH, creating a clear point of interest. And down below, we can see the PDL combined with the equal lows, giving us another strong level to watch. You will notice that both sides were heavily manipulated, with liquidations taken out on each end. After that, the price pulled back into the center zone once again. This creates a kind of range and deviation, which you might remember from our free trading course on smart money concepts. Now, let's deep dive into the move from manipulation to manipulation and break down how the market structure really works. Now we are looking at the same chart, but this time we are using the 1 minute time frame. If you take a look at the bottom left, you can clearly see that price was in a strong downtrend, pushing lower to take out the PDL, which stands for the previous day low, while continuing to make multiple break-off structures. After the PDL was hunted, a reversal started to form, and the trend began to shift direction with a clean market structure break. Then what happens next is the first real break of structure, and it comes with an extremely nice trade setup. These moves also happens right around an inner support and resistance flip area combined with an imbalance in the market. Like I always say, sometimes skipping those very first market structure breaks can actually be more beneficial, because the reversal may not happen immediately. But when you spot that first confirmed break of structure, it often gives us much better trades, just like we see this example. From here, the trend kept moving upwards, creating new break-off structures again and again, all the way until it reached the previous day's high. Now, as you can see, the previous day's high has been hunted right here. And the question is, will the price reverse at this point, or will it continue even higher? As you know, just because the price takes out the previous day's high or low, it does not mean the market will instantly reverse. The move can keep going, pushing further and further without stopping right away. In this example, you can clearly see that there is no real market structure break for a reversal. That means the trend hasn't shifted from an uptrend into a downtrend yet. Instead, the price keeps breaking structures to the upside, climbing higher and higher as you notice. At the very top, we also have the previous week's high just sitting there waiting to be hunted. This is one of the main reasons why the price continued pushing upwards in this example. Now, once both the previous week's high and the previous day's level taken out, both of them, that's when we finally start to see the first clear market structure break. This becomes the very first sign that a possible reversal might be forming. Right here, what you are looking at is an inner market structure break shift that happens again. This actually creates a possible long opportunity in this example. It's not a bad idea because the PDH, the previous day high, acts almost like a strong amplifier for the move. But in these trades, there is one issue. The PWH or the previous week's high has already been hunted. Because of that, our upside targets are now much more limited. And this is exactly why I often say that waiting to see the first break of structure after a market structure break gives you more comfort and confidence in your trades. At that point, we know the trend change is more likely confirmed. So in this example though, the inner market structure break turned out to be nothing more than a fake move. Instead of reversing, the trend continued pushing downward. Reading the markets can be tricky because there are so many fake movements and fake signals. That's why I always emphasize focusing on clean and solid targets like PDL, PDH, and PWH. These levels can help confirm your bias and give you a clear sense of direction. And when you combine multiple structure confirmations with a strong trend, your trading decisions become much more reliable in my opinion. Okay folks, have a great and nice day. Remember to manage your risks. See you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.